Hello, my name is Peter, I am the assistant of the Astrumix channel. Today, I will make a presentation of Apple. In order to do so, I will use my presentation template. To begin with, this is a company in the new technology sector. As you know, its head office is in the United States. Talking about the geographical distribution of its activity, it is well distributed because it is present on several continents with significant shares of its turnover. As far as its activity is concerned, its turnover is divided between the sale of computer hardware, services and accessories. This is both its strength and its weakness, and I will talk about it later in my conclusion. Its lowest price over 1 year was $116, while the highest price was $182. The current price is $168 at the time of the video. The orange gauge represents its level with respect to the highest and lowest prices over 1 year. We can see that it is currently quite high. The evolution of its share price since 2011 is represented by the black curve. The red bars represent the price variation between the 1st of January of each year. For Apple, this variation is growing strongly. An investor will therefore see his capital increase. Let's now move on to the comparison between the share and an index. Here, I compare the performance since 1999 between Apple and the S&P 500 index. I could have used the Nasdaq, but I prefer an index which is representative of all American companies. For the company, the performance is impressive with more than 43,000%, when the index has achieved a performance of more than 250%. This is a comparison where each one is given a base of 100 at the start date and the share's cumulative dividends are not taken into account. The share outperforms the index very clearly. Now we come to my homemade model. As I always remind it, this is not a magic formula, but simply a set of indicators to try to give an overview of the fundamentals of the share. The model can be improved and also depends on the type of share studied. The indicators are broken down into categories and each is given a score between 0 and 1. I would also like to remind you that this is not a buying or selling advice, but simply an educational video. You must do your own analysis before each purchase or sale. Apple's overall score is 11 out of a maximum of 17 points that can be reached. Let's start with the first point, which is the share price. The rating is bad, it is 0 out of 5. This means that the share price seems high compared to its fundamentals. This is the negative point of the share. In terms of profitability, the performance is excellent with an outstanding profitability. For debt, the situation is perfect with cash for the company. As for the dividend, the yield is low. This is due to the share price, which has risen rapidly, while dividends have not followed the same trend. As far as the dividend payment is concerned, there is no need to worry about that. For the 10-year performance, it is excellent. The share price has risen by 780% in 10 years, from 1 January 2012 to 1 January 2022. In terms of the dividend paid, it has increased by 382% in 10 years. If we add the evolution of the share price to the dividends received, we get the real performance of the investor, which is 822%. This is an amazing performance. I think that all investors would dream of such a result. Finally, as for the development of turnover and earnings per share, it is very good. The company was able to take advantage of the health crisis. We see that turnover has increased by 51% compared to 4 years ago. As far as profits are concerned, they have increased by 100% over the 4-year period. Talking about short-term trends, here are 3 views at 15 days, 3 months and 6 months time. The 6-month indicators show an upward trend in the share price. At 3 months, it is stagnant, and at 15 days, it is slightly down. This may indicate that the share is in an in-between period. In terms of the evolution of the company, I have taken 4 classic elements: turnover, profit per share, financial leverage and price-earning ratio. The blue color indicates the data published by the company, and the red one indicates the analyst's forecasts for the following years. As far as turnover is concerned, it is increasing and, according to the forecasts, this should go on in the next few years. Note, the turnover is an interesting indicator, but what really counts is the profit generated by the company. The situation is the same for the profit per share, which are increasing and should continue to do so in the coming years. Regarding the financial leverage, it is negative. This indicator shows the number of years it would take for the company to repay its debt if its activity remains the same. Here, the company does not use debt to grow. Moreover, it has more cash than debt. For some people, this is not positive, as it may mean that the company is not investing enough to grow. Personally, I don't have a problem with this, I prefer this rather than a high leverage. Below 2. The company manages its debt correctly, but it can be higher depending on the sector. Finally, the last graph shows the evolution of the price-earning ratio over the last 10 years, which is the ratio between the stock market value of a company and its profits. A ratio between 10 and 17 can be considered normal. In our case, it is currently high because the share price is also high and it has evolved rapidly like the latter. This means that the fundamentals have not developed as quickly. Now let's look at the company's dividend payout. To do this, I will show you 4 graphs. We will then see the dividends paid over the last 10 years, the variation of the dividend paid between each year, the yield by comparing the dividend paid with the share price on 31st December of the year, and finally the yield of a share purchased in January 2012. As can be seen, the dividend has risen steadily since 2012. This is an interesting situation for the long-term investor. The variation in the dividend is also interesting. Over the last 5 years, the variation is on average of 7%, which is correct. The third graph shows the yield of the share. For this, I use the dividend paid over the year according to the share price on the 1st January. The latter is down because the dividend has increased less quickly than the share price. The last graph shows the evolution of the yield of a share that we would have bought in 2011. Indeed, once purchased, our share will always have the same purchase price, but the company will pay different dividends. The hope is that the longer you hold a share, the higher its yield. I therefore divide the amount of the dividend received in the last year by the purchase price. The graph shows that a share bought at the market price in early January 2012 would now have a yield of 5.92%. Finally, let's move on to the trend. For this purpose, I will show you 3 graphs. We will see the trend of the stock market price in 5 years, 10 years and 20 years. As a reminder, the red line corresponds to the trend plus 2 standard deviations, the orange corresponds to plus 1 standard deviation, the blue to minus 1 standard deviation, and the green to minus 2 standard deviations. In theory, a price will fluctuate around the trend. If it deviates from the trend, it should at some point return to the trend. In simple terms, if the price is above the trend, it can be assumed that it is too high and will go down. If it is below the trend, it can be assumed that the price is too low and will go back to its trend. When we arrive at 2 standard deviations, this can represent a significant overvaluation or, on the contrary, a significant undervaluation. But beware, the study of the trend is not a magic formula either, it can be disrupted by a rapid evolution of the price or a high volatility. In any case, it must always be linked to the company's fundamentals. On the graphs, we can see that whatever the period, the share price has left its trend. The longer the period, the greater the deviation. At 20 years, we have exceeded 2 standard deviations. But this must be linked to the performance of the company's fundamentals, which also change rapidly. In conclusion, what is my opinion about Apple? This is clearly a quality company. It is a hybrid. On the one hand, it has a good growth in its share price. On the other hand, it pays a rising dividend every year. So you get an increase in your invested capital and an extra income every year that you can invest or use. The negative point is the current high share price. Investors anticipate the evolution of the latter. The main problem of this type of company is innovation, and it is also its strength. This innovation makes it possible to create unique products and sell them at high margins. But then you always have to innovate, and there can be an industrial failure, an innovation that does not work or is not successful. But there can also simply be competitors who create a new innovation and take significant market shares. For me, this is a key point. If it manages to maintain its level of innovation, the current fundamentals will catch up with the share price in the future, otherwise, the risk is that the share price will fall or stagnate. So, you need be confident in the future of the brand. If this is the case, we have seen that the share price can grow rapidly. The company also has good fundamentals, an interesting dividend payment policy, so, in the long term, it is interesting if it maintains its creativity. Finally, the graph speaks for itself. It shows what an investment of $1,000 in January 2011 would have been worth 11 years later. The value of the investment would now be $15,983, having accumulated the dividends. In other words, a very good performance for any investor. Now the question is, will the company be able to maintain its innovations to ensure its growth? This video is now over, thank you for watching it to the end. If you liked it and found it useful, please add a blue thumb to improve its visibility and you can subscribe to the channel so that you don't miss any future videos. You can also answer the poll question in the description and it will help determine the next topics to be discussed on the channel. Thank you and see you soon.